ختامها مسك بالطبع.
Assalamu alaikum. So first of all, I want to thank the Abu Dhabi Media Summit, of course, for hosting us here and hosting this panel session, but also really to help me pin down Fadi to talk to me uninterrupted for 30 minutes, which over the many years of our friendship I haven't been able to do yet. So thank you for that.
Thank you.
Ladies and gentlemen, as you know, well, as maybe you don't know, but Fadi and I share a number of boards, so we sit on a number of boards together, we've been friends, but really he is someone that I look up to tremendously for his deep sense of purpose and his relentless pursuit of creating opportunities for youth across the region. So thank you, Fadi, for being
thank you for that.
And doing what you do. Now, this is the way it's going to work. I'm basically going to ask questions, and Fadi's going to answer them. So,
sure.
Now, the topic today is, of course, about financing innovation. Now, it goes without say, of course, that innovation activity has been probably the single most important component of long-term economic growth. The future health of any economy rests on its ability to innovate. In 1957, Nobel Prize winning economist Robert Merton Solow credited innovation with about 90% of productivity growth in the first half of the 20th century. Now, the wealth of nations in the 21st century is largely intangible in the form of knowledge assets, which of course is driven in large part by innovation. Now, the key to sustaining and growing a community of innovators is, of course, an enabling environment, but very importantly, access to capital. Now, in the aftermath of the financial crisis, with cyclical stresses having uncovered and in many ways exacerbated some of the pre-existing structural issues, financing the next wave of innovation is a critical requirement and usually presents major challenges. Now, we only have, well, now less than 30 minutes to flesh out your thoughts on this key subject. So I'd like to leave a little bit of time to get a couple of questions from the audience. If anybody has any questions while we're having this brief discussion, please do either tweet them or feel free to tweet them directly to me, which is at Badr Jafar, and I'll be checking to see, and I'll pose them. So if you see me fiddling with my phone, Fadi, it's not that I've gotten bored
That's
from
okay.
what you're saying.
I'll try to keep you excited.
So let me start by painting this picture. Now, it's said that the three pillars of innovation are human capital, financial capital, and technological capital, and that innovation really occurs at the cross-section of these three pillars. And so the key to driving innovation is to enhance these three pillars. Now, the 2014 Global Innovation Index, which is published by Cornell University, INSEAD, and the World Intellectual Property Organization, confirms the existence of a significant innovation gap within the MENA region. Israel's ranked at the highest at the 15th place. UAE and Saudi are ranked 36th and 38th, and the North African countries are lagging behind quite significantly. What do you think are the drivers behind this fairly spiky pattern, and how much of this divergence within the MENA region is due to the varying levels of access to finance?
Thank you, Badr. I don't think access to finance is essential. It is not the whole story. I think maybe you and I need to define what we mean by innovation. So my definition of innovation is the ability to take certain pieces of IP, of knowledge that comes out from anywhere, from anyone, and actually bring it out to affect people's lives, whether as a business, or as a social business, or as research that translates into action. So without action, innovation, in my view, is simply research that sits on the shelf of a library, of a university, or somewhere. So the act of innovation is there is an action part of it rather than only research. And this is the crux of the question here in the region. So a good chunk of innovation that happens globally, the big impactful innovation is happening either in big organizations that have R&D inside, and they take these new knowledges that they are acquiring through their research and translating them into their own businesses, or at universities and research centers and education centers that get into a commercialization process. And that's where the symbiotic relationship between university, business, and the innovator happens and impacts life. So in our region, universities don't do much R&D. Our big businesses do not have, as I know it, except for the oil and gas industry maybe, where there is really an indigenous commodity that requires research and is homegrown, if you want, or available in the ground. There's very little innovation that is coming out from here. So some is coming out. A lot of our innovators, unfortunately, over the years, have become a product of, because of this lack of nurturing, are at the core of what we call the brain drain. So the Arabs that are innovating today are not here. They are in Silicon Valley, they are in big universities in the West, they are in big universities in the East. They are in places where there is an appreciation of what it means to innovate and take that innovation into action to impact people's lives.
But
then capital comes after that.
Sure, but considering capital, it's often said that the best structures to support innovation are public-private partnerships. Yeah. But in our region, of course, as you go across the MENA, there's varying levels of activation by governments of some of these innovation models. Where do you think the responsibility lies? In the private sector or in government?
Both carry a big responsibility for the, I'm going to call it failure now, because we don't talk to each other. There is little trust amongst each other. In some countries it's different. I don't want to generalize. The Arab world is 22 countries, and Dubai and Abu Dhabi and the Emirates, Jordan, they each treat the story differently. But it's okay. I will take the risk of generalizing, Badr, and say there is very little work between private and public sector. The public sector needs to open its arms and say to the private sector, you are welcome to be part of the development process, and come into our public universities. Look, the public sector runs our education system here. So, I mean, there is some private, for-profit education, but the mass amount of people that are graduating and studying in our schools are in public sector universities. So the public sector needs to say to the private sector, you need to own up and come into the into this domain and help us build that ecosystem of the knowledge economy that is coming to the region with a vengeance. There is, I mean, we are in the middle of a massive changing process that a lot of it is coming from outside, and we need to also generate our own solutions for many local problems that do not necessarily have global applicability sometimes. So there it is and has to be a public-private relationship that is defined and that is equal. And with each partner understanding their clear responsibility in this. So the private sector brings in the global connectivity, it brings in capital, it brings in an entrepreneurial mind, a solution-based mind, a non-bureaucratic process, a process that tells us you need to actually deliver on projects rather than only have projects for the sake of projects. We live by returns on what we do, and we don't live and exist on just simply throwing projects and building infrastructure. There is that combination of both that could be very powerful, and I think in the West, it is that simple. If you want to take Silicon Valley just very briefly and take Stanford University as the focal point of innovation. If you look at Stanford University, it has everything that I've talked about. So it has the research, it has the scientists, it has the money. Stanford University even participates itself in venture investing. It has the venture capital industry on Sand Hill Road, which crosses straight into the university, and each work in a very open and transparent and win-win environment. There is that sense that in openness, in generosity of sharing, you are going to create an industry that everybody benefits from. So if we move into that frame of mind that talks about solutions rather than who solves them, then we have a public-private relationship that actually works.
So let's take, and not generalize, and let's take the UAE as an example specifically.
Okay.
So there are a number of great, in my opinion, initiatives backed by the government to try and support innovation and entrepreneurship more broadly. I mean, there's, the Telecoms Regulatory Authority, the ICT Fund, there's the Khalifa Fund, of course, for enterprise, which I think it's about $550 million worth of capital. There's the Expo 2020 Partnership Fund, about €100 million, supports innovation. Do you see, though, that there's a flip side to this easy money that's available? Does it in some ways disincentivize entrepreneurs to really bootstrap and go through the trials and tribulations of setting up a business and being truly innovative?
Yes. Government should not be in the business of deploying capital. That's my view of it, as generous and as noble a cause it is. Government needs to, in deploying capital, that it becomes politicized and it becomes a right. Investing and creating an ecosystem for entrepreneurship requires that the entrepreneur understands that there's a return for the capital that he is given, and it's not charity. So the minute charity comes charity in the pure sense of the word. Here's some money, go build a business. If it doesn't work, come back home. It's good that there is that massive safety net. I have nothing against safety nets. But entrepreneurship is about falling, is about mistakes, is about standing up again, is about feeling that you need to actually, you have stakeholders that you need to deliver to. And you have built in the UAE a fantastic ecosystem. Some, I can have some arguments with some things, and I love most of it. The critical element here is to couple the financial and the physical infrastructure that the UAE has, and it has a massive, fantastic infrastructure that you don't see in many countries. I mean, I was just in New York, and their highway system is just an absolute disaster, and they haven't fixed it in 30 years now. So we're blessed in the UAE in what we have, in everything in terms of physical infrastructure. But you need to move into the soft infrastructure. So bankruptcy laws are a must, and there is no reason for us not to create a bankruptcy law that protects the entrepreneur from going to jail, possibly, I'm not saying he does, possibly if he fails a business, because businesses will fail. I mean, if one thing I can predict to you very easily is that if you start a business, there is a possibility that you are going to fail no matter who you are. That's one. Number two, the ability to have, and I'm going to tread into a bit of a sensitive issue here, but it's okay. The ability to tread between free zones and onshore. I love free zones, but I also want onshore equal partnership here. Onshore equal, but there's nothing wrong with onshore equal partnerships. In my view, it brings more investment. It brings more nurturing to the Abu Dhabians and Dubaians and UAEans. There's nothing to be scared of it. And as I've been doing business in the UAE more than the average age of the UAEan here, 33 years now. I'm as much as a UAEan, and I love that. I need to own my business 100%. It's okay. I'm not scaring anyone. I mean, it's okay to have foreign ownership here. You will bring that. It is the sense of ownership and the sense of partnership will increase once you have an open system. I think that's the beauty of Silicon Valley. There's a question you wanted to ask, and I'm going forward.
Preempting.
Silicon Valley is an open system,
Makes my
guys.
job so
Everybody
easy.
comes and does business. I mean, it's an open landscape. I know it's a big discussion, and I'm happy to be part of this discussion, but I'm laying it out there. I mean, these are the issues. I say them in private, and I will say them in public. There's nothing wrong with that.
No, I agree. Look, as far as... Now, moving from the level of sort of innovation on a company level and the ecosystem on a private sector level up to a country level or an emirate level in the case of Dubai. So Dubai recently launched the Dubai Strategy for Innovation, and their objective is to make Dubai the most innovative and creative city in the world through introducing these 10 pillars.
Right.
And I quote, they'll do this by a number of initiatives that will expand cooperation between public and private sectors, education sector, entrepreneurship, global networks, in addition to citizens, residents, and visitors. So everybody needs to get involved. You talked a bit about Silicon Valley. Is that dream a dream, or is that very achievable?
No.
And if it is going to be achievable, then there are certain gaps, some of which you mentioned. But how, what time frame is realistic for something like that to happen?
If I've learned anything in coming to the UAE in the past 30 years is that everything that is being said by our leaders in the UAE actually is done. I mean, this is, so if they say they're going to do it, you'd better bet that it's going to happen. And whoever came to the UAE in 1990 or the year 2000, and we'd see the amazing, incredible, fast delivery of promises by the leadership of this country. And I think that's what distinguishes. That's what a leader is. A leader, at the end of the day, is promising something and delivering on that thing. And that's when people believe. If you stand up and say, I'm going to do this, and here's my strategy, and my strategy is going to be delivered on a certain time, and it actually happens, I mean, you have more believers. And I believe. So it's going to happen. There is no reason why it doesn't, it's not going to happen. The multi-cultural, multi-ethnic, multinational population that feels that the UAE is its home is quite powerful. I don't think there is a country in the world that looks like the UAE in its multicultural, multi-ethnicity. So people talk about Singapore and that the UAE is a Singapore. The UAE is a Singapore multiplied by 120 different nationalities that actually feel this is their home. When I first came, by the way, in 1990, again, in 1980s, and I'll tread into some sensitive stuff. When I first came here, most of the expatriates were here in transit. People came here, worked for a few years. It was a hardship space. I mean, imagine that the UAE is a hardship place. And people packed their bags and left. I would remember our Aramex managers telling me, I can't have my kids have friends because most of them will come to school, spend 2-3 years and go, because they will get transported by their companies to other countries because they're expatriates. I think today expatriates in the UAE they're called expatriates, but they feel they're at home. People want to have a final destination, and this is whether it's a big story again and a big discussion, but people feel this could be a final destination for them. So you'd better be ready for it. They want to come, they want to invest, they want to build, they want to innovate, they want to create their wealth, they want to have their children in their schools, and that's why you see the boom in everything that you see today. It is because people have decided that they're spending their money here because this is home. And that's a big story about how innovation happens, because you only innovate at home.
Well said. Now, something which is close to your heart, and that's venture capital. It is, in my opinion, still in its infancy. I think the potential is a lot higher right now, but it has evolved significantly over the last 5 to 10 years, not least because of people like you who have really supported it. Now, a platform which you helped build, the WAMDA Research Lab, published a report recently, which I highly recommend that everybody reads. And it has a couple of interesting findings. Now, one finding is that general activity has increased big time over the last 5 years. Over 3 times as many companies received investment in 2012 than in 2009. A second finding is that funded companies are indeed having an impact and then want to expand. 78% want to grow their presence in the GCC in the next 1 to 2 years. But the gaps pointed out in the report is that funding is concentrated in the at the seed level.
Right.
And with a distinct lack of larger investments, so
Correct.
above the size of $500,000.
Correct.
And the second gap is that there's minimal follow-on funding. So almost 70% of all the samples looked at
Right.
did not receive any follow-on funding. So from a venture capitalist perspective, what needs to be done to try and fill those important gaps?
What time did you come here? Were you in the morning session? No.
Unfortunately not.
So I'm gonna propose a view other than what we heard from some people in the morning, and they know who they are because I spoke to them outside about it. I'm a believer that the more capital, the better, and you don't need to be focused on specific industries. The knowledge and the digitization and the disruption of our industries as we know them is coming and coming very fast, and you'd better be ready for it, and people are investing in it. So I'm not gonna pick and choose industries because everything, in my view, is being disrupted today, either on a fast scale, just like we saw earlier by Karim and Uber, because they are really disrupting the taxi or human transportation on the ground services. So we'd better be ready for it. So this requires a lot of investments in very early stage. Mm-hmm. So, and the job creation process is a product of companies that are 5 years and younger. If you don't invest aggressively across the startup stage, the seed stage, the very early believers, you're not going to have growing companies. So if I'm going to start by picking and choosing certain industries, I'm out of the game. So I'm a believer, and people criticize me sometimes for that, in spraying, praying, and playing. If you don't spray, you're not going to play, and you'd better pray so that your businesses actually make money. So, but no, that's the reality. Look, I in my early portfolio, I have 75 companies in the region, and I have been aggressive. Yes, I will invest in anybody that comes to me with an idea that I believe in, especially that the entrepreneur has built enough credibility, in my view, as an entrepreneur, and his character fits. But these are the businesses that are growing and looking for seed funding. The 4 problems you discussed are essential for us. Entrepreneurs tell us very clearly, we interviewed 1,000 of them, the biggest entrepreneurship research ever in the region, face-to-face, 1,000 entrepreneurs. They tell us 4 things. There's a lack of growth capital. There's a lack of seed capital. And you know, if I want to throw a number at you, there is no more than maybe 25, 30 million, maybe $50 million of seed capital today in the region. I mean, that's absolutely pathetic. I mean, it's ridiculous. I mean, at the amount of the money that this region has, $50 million or $100 million of seed capital, we can't even start talking innovation and building businesses if we don't have some really serious money. Some of it is going to be lost. And that's where the public-private comes, because the public sector is much more patient than the private sector. So let's find a way, a middle ground. International agencies are also patient capital. We need to nurture the industry. If you don't spend money on it, if you don't nurture it from education to actually building the platforms of support, you're not going to have a business. So you need to spend a lot of money to create a lot of startups. One. To have scale-ups, you need scale-up capital also. There isn't more than $200, $300 million max in venture capital in the region. If Lebanon thinks it needs $400 million for its Lebanese startups, so imagine Lebanon, poor Lebanon. So imagine how much the rest of the market, and Lebanon is less than 3% or 4% of the GDP of the region. Mm-hmm. So, number 3, the entrepreneurs tell us they have a problem in accessing talent. People that graduate from our universities or talented people want to work for big companies, the Googles, the Facebooks, the Masdars, the big names. If we can't get the talented people to come for work for startups, you're not going to be able to build the startups. Why is there a problem there? Part of it is incentivizing. There is no sexiness with startups yet. So in Silicon Valley, it's sexy. You graduate from Stanford, you want to work for a startup. I need to feel that. But as our friend at Karim said earlier, Magnus, he said that he has given stock options to every single employee of his. That's an incentive process. That we don't have a stock option law in the UAE. Why should I go to Cayman Islands or the Virgin Islands to register my company to give shares to people that are working in the UAE? I mean, it's just a bit weird for me. I mean, it doesn't make sense, and I don't know why regulators think they want to interfere with who I want to give shares to. I mean, this is my company. I need to choose who I give shares to and how I give these shares to, and the regulator has nothing to do with that process. It is not his business. They are not going to lose the money. I am. So leave us alone. Let us build the business. Let us work within the law. But there are certain things in the law. This is not only a UAE issue, ladies and gentlemen. This is an Arab issue. Every single country in the Arab world does not have stock option laws. And every single country in the Arab world does not have a bankruptcy law either. So we need to have those. Number 3, startups tell us, last thing, startups tell us that a mentor that has come into the business has helped them build, and raise money and improve the chances of their success. So people like you who are successful, make yourself available, because every entrepreneur needs an elder, more experienced person so that they can help them actually tread the difficulties and understanding certain challenges that they have. And you wanted to say something?
I was just going to say, don't you love it when Fadi gets fired up?
Well, that's why you have me up here. I'm the firing up type of fellow.
So look, we talked a little bit about the the sort of grassroots initiatives to try and fund innovation. You mentioned that there's a double-edged sword to having the big government entities playing a part. Mainstream financial institutions, though, are not existent, in my opinion, when it comes to financing.
Family businesses are not
less than
investing
5% of the bank portfolios are in that space. So that's ridiculous. What is it about now? We understand the inherent risks at play, but how can we get them to step up?
Banks want to give money. I was at a conference. I'm a constant conference goer. So I was at a conference recently, and one guy said, banks give money only to people that have money. People that don't have money and need money from the banks will not give them money. So, I mean, it's just like a weird relationship. So the people that are in most need of money are small and medium-sized enterprises and entrepreneurs and startups. And if banks don't step up to, across the region, it's 8%. In the Gulf, it's 4%.
4%, yeah.
4% of the bank portfolio. We are in love of name lending. Nothing wrong with name lending. Nothing wrong with lending big companies. But we need to find institutions, and that's where public-private maybe comes in. We need to find institutions that create a mechanism and a platform to actually go all the way down to that 50K, 100K loan for these startups, because you will be surprised how you are going to fuel the economy. Now, okay, banks are not risk takers.
Yeah. Huh? And make money.
Yeah, they will make money. I'll tell you, I have a lot of experience in microfinance, and I love giving that example. A lot of you don't know that there is $1.5 billion of deployed capital in microfinance in the Arab world. There is about 3 million Arab borrowers in microfinance. Microfinance, I'll remind you, is money borrowed by the non-bankable. The non-bankable, these are people that don't have bank accounts. Banks will never open an account for them. And they are people that are outside of the mainstream economy. 85% of these borrowers are women. And ladies and gentlemen, this is non-guaranteed loans, and 98.5% of these loans get paid back. So the bankable, the non-bankable, I'll bet you are not going to have a big provision in your balance sheet for these people, because they pay. You know why they pay? For 2 reasons. One, because they're women, and women take care of their home. And with all due respect to men, women are much better payers of their debt than men are. And number two, these borrowers need to borrow again. And they pay back because they need to go back and say, I have a fantastic clean record, I've paid back, can you give me some more? And the virtuous cycle is incredible. So, and I would argue, again, this is a long story, and we have 1 more minute, I would argue that SMEs will do the same, because SMEs need that first $10,000 or 10,000 dirhams or 50,000 dirhams, and they want to start their business, they want to prove it, and they want to come back for more because they are starting to get successful.
Great. So on that note, we have 42 seconds left, and I want to get to a question. So you mentioned crowdfunding. Now, crowdfunding, obviously, is a lot that's going on. There's 3 or 4 platforms alone just out of the UAE in different spaces, and it's an exciting space to watch. Are crowdfunding syndicates friends or foes to the VC industry?
No, I love them. I love them. They're filling a gap of the banks, not actually. There are, by the way, 2 or 3 new platforms coming up, which I love, which are debt-based platforms, not equity-based. So they will actually give access to debt to the people that cannot get access to debt from banks.
So crowd financing.
If you tell me what business I would be investing in, this is a business that is going to disrupt the banking industry big time. They better wake up to it.
Yeah, no, I agree. I agree. So we have a question from Rory Jones. How do local investors become a lot more educated about how to go about investing in startups and tech and media?
So we need to do a lot of education of, maybe we need to have a workshop that discusses seed stage, early stage. I call it very patient capital, higher risk capital, but very patient capital. For people who think you're going to build a building and get rent immediately, don't get into this business. If you are an investor that is willing to wait 5 to 10 years to build the business and actually make a lot of money eventually, you can get into this business. There is a process of understanding what it is you're going to choose. There are networks of angel investors across the region. You can connect to them. There are networks of various organizations that can help you. Flat 6 Labs at 2454. You have Oasis 500 in Jordan. You have all these incubators that help even investors understand and vet the startup, specifically in the tech space. So. It requires a lot of education, a lot of discussion, and you need to bring these people that are investing. You are one of them, I know, Badr, and have a dialogue. Let us have a dialogue. I think government needs to go all the way down. You've built infrastructure. It is incredible, specifically here in the UAE. Think of the startup industry as infrastructure. The minute your brain thinks that startups are infrastructure and will create jobs, then you automatically will convert the public sector into believing that there is a long-term benefit to what you do. Just like education, you build a school, and 20 years later, the kid graduates and goes to college and has knowledge. Same thing with the startup business. You cannot have big businesses if you don't have baby businesses, and we need to invest in these baby businesses so that they can stand up and show the results of nurturing in the early stage. If you want to bet on secure, successful businesses, good for you. You're not adding any value. There's many of you. If you want to nurture the industry, come and take risk with us. We would love to have you.
Absolutely. So as I said at the outset, ladies and gentlemen, there's no better person to comment on these issues than Fadi. So once again, thank you very much for your time, and thank you for listening.